Good morning, everyone. David speaking. It's 11 o'clock here on the 3rd of April, a couple of hours before the US Non Farm Payroll report. The report, as we've all read, is going to be awful. Time will tell how much of that is discounted into the market and how much isn't. Yesterday was an up day, and as you can see, the advances increased over the declines, but the short-term trend, or the primary wave in VectorVest, is down. The underlying trend is down, as it's been for 6 weeks now, and we've got a confirmed down in place. VectorVest does not advocate buying stocks at this time, is darn good advice. So I've got some charts for us. So if we go to the VectorVest composite itself, we can see that those are the medium-term signals on VectorVest, called the DEW signal, which gave a sell signal on the 24th of February, and that sell signal is still in place. As we'll see in a second, some of the shorter term signals gave a buy signal over a couple of days here, which has now turned into a sell signal. But we can also see that the two measures of momentum on VectorVest, the MTI and the RT, in deeply oversold territory. The MTI has come up a little bit, but still sitting below 0.65 at 0.5, which means it's mega oversold. And the buy-sell ratio is right down on its knees at 0.02. And noticeably in this little rally that we've had over the last week or so, that the buy-sell ratio hasn't in fact moved at all. I'm hoping that the most positive thing I can say is that although the short-term trend is down, if this should move down and both the RT and the MTI are moving up, as I spoke about yesterday, that would be bullish normal divergence, and that normally precedes a turn. So I am looking for a turn, ladies and gentlemen, but I don't think it's going to happen today. It looks to me as if this market has got more downside before we get that. Is it going to take out these lows, or is it going to stop above the lows at 78% of that? I have no idea, but all I'm trying to do is to find a low risk setup, and I don't think we're that far away from that for the long. So let's have a look at the S&P, maybe numbers you're more familiar with. This is the S&P over the last 5 years. It's a weekly chart, and I've drawn a Fibonacci retracement from the low to the high, and rather than using the wicks, I've used the closing prices, which I find are more useful on long-term charts. And as you can see, the market found support at exactly 78% of that, a very important number. Whether you believe it's self-fulfilling, i.e. everybody's watching the same number, or whether it's absolute, sent down by God himself, we could argue all day. But nevertheless, markets in fact react to that number over and over and over again, as I show people at my Monday afternoon sessions. Market came off that to the tick. If we blow this up now to 3 months, that's the S&P. As you can see, the low of the S&P off that 78% retracement right to the tick, and that's the little run up that we've had over the last couple of days. If I put on the primary wave, we can see this superb VectorVest signal on the 21st of February saying that this was over, and this little rally, and a couple of days ago now it said that the short-term trend was down. Now we could also use a fib here to see where this is going to go, and certainly if I were to draw a fib from that low to that high, I think that as long as we stay north of this 78% retracement, then I'm quite happy that we're in fact beating out a bottom here. But I wouldn't be at all surprised to see it go a little bit lower into the bad news that's definitely on its way this afternoon. As I say, the only ambiguity is how much of that bad news is discounted and how much isn't discounted. So I think that we're close to a bottom here, folks, but as I said yesterday, as I've said over the last couple of days, there's probably a little bit more pain to go. If I now look at the futures market and what it's doing this morning, this is the S&P 500. This is the futures market, so it's running live as we speak. I'm quite encouraged by in that run up that I showed you in the previous chart, 5 waves in that, which is always good, and it's now pulling back. And the 78% retracement that I spoke about is somewhere down around here. I can draw it in quickly if I can find it. There we go. This is not my software, so I'm not that familiar with it. So there is the 78% retracement. So there's the 618, there's the 78% retracement. This market, in fact, rallied overnight in this little rising wedge pattern, which technicians always refer to as a bearish pattern. I think there's going to be a huge amount of noise this afternoon, but I think, ladies and gentlemen, that will probably come back a little bit. So those of short-term traders that are listening, there's probably an opportunity on the short side for that would be a big move of probably 100 points or so, but my word, it's going to be noisy around the announcement, so I don't think it's for me. I'm looking over the next couple of days, and I've got my eyes peeled for the next VectorVest primary wave up. And if I go back to this chart, the S&P chart, if I go back to the S&P chart, that the next VectorVest primary wave up, I think, will be an outstanding signal. So it's probably, I think, going to pull back. I would like it to stay north of this. It could easily make a double bottom, but I think that the next VectorVest primary wave buy signal, in other words, a green here, that can quite easily in fact mark the bottom of this decline. As you know, I feel that after this we're probably due for a long bounce. That bounce will last weeks, in my humble opinion, rather than days, and that bounce could translate into a new bull market. Clearly this has all been driven by this darn bug, but I'm going to assume that it is a bounce until it in fact breaks up, and breaks up. I would like it to see from that high down to this low. If I saw it in fact closing above a 78% retracement of this sell-off, this big sell-off, and closing up there for a couple of times, then I think that I would assume that it's no longer a bounce and we're now back in a V-bottomed recovery. Until that happens, then I shall be assuming, ladies and gentlemen, that this is a bounce in a bear market. But that bounce in a bear market in deeply oversold shares, certainly in the UK, in the JD Sports and the Games Workshops of this world, that bounce can quite easily make my annual target. So I'm getting very excited, and I'm looking forward to the next VectorVest primary wave buy signal. I think that's going to be a good one. As always, I shall be trading the market, not the forecast, and I'll be largely doing what the front page of VectorVest tells me to do. In these particular videos, I speak about the US market because I think it is leading, and I think that our market in the UK will pretty much do what it does a nanosecond later. So we await the dawn of the US jobs report this afternoon. It's going to be ghastly. We'll see how much of that is in fact already discounted into the market. It's going to be noisy, and short-term traders with a strong constitution, I think, will probably get a short this afternoon. I hope this helps. Bye-bye.